August 31st, last day of August, Wednesday. Market analysis. Hi, Stan Ehrlich. I'm going to cover the markets in general, of course, and what we're going to see in price action hopefully in the next few days and beyond. I'm also going to cover some ER signals and some cycles in Eurodollars, the October lows, live hogs, crude oil, and the U.S. 30-year long bond. Here we go. Well, we know the market topped out a couple of weeks ago on August 16th in the middle of this month. Bringing up a daily chart, full screen. Now, it topped out at a critical spot. There were many different reasons for it topping out. It was overbought. There was a gap below the market to close. It was at a resistance area. It was at the 200-day moving average. The October lows are coming up only in about a month and a fraction. The QQQ had a bearish engulfing. We were at a major bear trend line. That's at least 7 reasons. And again, that was the middle of the month, right smack on top right here. Okay, it pulled back, then all of a sudden it gapped down. And it gapped down on Monday, the 22nd. I talked about this gap being a potential breakaway gap to the downside. And breakaway gaps are a little less likely to be closed completely. In the next few days, the market came up and closed most of the gap, as you can see, and I'll zoom in a little bit here, with these rally highs, but did not finish closing the gap completely. So, breakaway gap, it seems to have been, past tense. Gigantic bearish engulfing last Friday, pretty much the nail in the coffin. And we are now 2 more days down, Monday, Tuesday, and today being Wednesday, approximately unchanged, up very little. Today so far is what we call an inside trading range day. It has the low is higher than yesterday's low, and the high today is lower than yesterday's high. You got to think that one out. Anyway, it doesn't say much for which way the market's about to go, except for here's the major clues. We did get down to our custom RSI indicator oversold level, therefore causing color changes in the RSI graphic on the subgraph here. That's one of the major reasons that I turn bullish or bearish and expect to see or hope to find an actual signal. The RSI overbought and oversold levels are warnings that the market is probably going to turn around. It doesn't tell you for how long. It doesn't tell you for how much of a move. All I need to know is that it's about to turn around. And my trading system, ER Signals, follows the market with a trailing stop that's very unique in a variety of ways. You don't see it on the screen. We track it on a 1-minute chart. And frankly, since I've been talking about it a little bit, I'll go to one. I have it set up in advance. And of course, it's a good example. So this morning, the market rallied on plug, PLUG, right up to our little red line here, which is where we want to sell short. It triggered a new short sell order. We got short 1 minute after the high of the day so far. It never came back completely to make a new high, although it came close. Our trailing stop had already come down, but we didn't get stopped out on this chart. That's a yellow line. And for this scalp day trade version of the ER3, we ended up with a profit of 80 cents on a $28 stock. The same exact code got short at exactly the same time and price, but this code says let's try to stay with the trade as long as we can, overnight, maybe several days. So it's a swing trading version, or maybe an investor type of version that we could hold on the trade, hold the trade for many months if the stop is slowed down considerably. Right now it's kind of at a medium speed, so we have an 80-cent profit momentarily. We had a little bit more at the low of the day, of course, a little while ago. Enough of the ER. Let's go back. So, what's next? We're oversold on the S&P 500, the DIA, Dow Jones, and the QQQs. The Russell 2000 is not quite oversold yet, and those charts I'll show you right now. Here it is in blue background. The DIA has turned yellow for the daily bars. That means it got oversold. It's a warning, yellow. Same thing for the QQQs, no surprise. The 2000 is not quite oversold. It came very close, and that's what happens sometimes. Not necessarily all four of them. Sometimes only one of them turns yellow for overbought or oversold conditions. But that tells me that we are probably about to have a rally. I actually would love to get a buy signal officially so I could take advantage of it mechanically and automatically. Otherwise, discretionary traders are going to be looking at this for a variety of reasons to potentially go long for a bounce, for a rally. But people, we are in a bear market. I believe that, and I am trading it that way, and I have talked about this since the beginning of the damn year. By the way, we had an official sell signal for the S&P in late November. It wasn't the top of the market, but this one was a whopper. April 5th, an official sell signal, just before the big decline into the June low. And I'll show you one more thing before we change to other topics. The QQQ just recently had a sell signal smack on top of this last rally on August 16th. Mechanically, we're short, looking good so far. This is a 2-minute chart I'm changing to for the QQQ data. And here is the, excuse me, that's the wrong thing. And we are short from the bearish engulfing with overbought conditions on the 16th. Got short on, that's a signal. Got short on the 17th. Pretty much on the rally high. Very, very close. Exactly what the system is built for. Stayed short 1, 2, 3, 4, 5, 6, 7, 8, 9. Now the 10th day. Profit of 3. No, that's not the right number. Sorry. I actually don't have the profit. Oh, sorry. 22.96. 22, almost 23 points. 23 full points on the QQQ. All right. So I think I've covered, except for the opinion about what's about to happen, on the indexes. We are testing yesterday's support area that started building, which also happened to be a 50% approximate or a tiny bit below Fibonacci retracement from the last low in June to the rally high we just had about 10 days ago. So we've come down halfway. A tiny bit more, and that's for the spider. The other indexes are probably in the same ballpark. One reason to look for, along with being oversold, a potential bounce. Now, I don't think this is going to be very much. Frankly, I'm looking for something in the line of 405 to maybe 410, and I want to go to a daily chart to show you where that's going to end up being. So 405, I'm drawing a line at about 405 right there. That's the high of Monday. 410 gets you up to some resistance. I've already drawn a long-term bearish resistance line at that point. So 405 to 410 during the next few days. Today's Wednesday. Oh, hell, it could happen 2-3 days from now. 400 right now, almost 399 period. So what am I looking for? 5, 11 point rally? you know that can happen in a day or two. All right, so enough for the overall markets, and the same modest, no big deal, 1, 2, 3, 4 day maybe bounce goes for the DIA, obviously, and the QQQ as well. I am a little concerned I might get stopped out of this QQQ trade, so I may play some games there and change the stop to show you that it can hold on to long-term trades. Right now it's a great one so far, but I can manipulate things on purpose, 20/20 hindsight, so you wouldn't do this necessarily if you're using the system real time, but you could. But now I'm going to maybe take less of a profit. We'll see what happens. Okay, I want to show you some other stuff. Hey, the euro dollar has this historical rhythm that's not too darn bad. Cycle lows. Way back in May of 2013, you had a little bit of a triple bottom around the cycle low. It turned back up again. Took a little while. Same thing happened around, and I'll get March of 15, also December of 17, and November of 18, and also around September 20. September of 2020. So, looking pretty good. Now, we just had it on time. In fact, I started looking for a cycle because I put the anchor bar smack dab on the low. Look what's happening today, guys. We have a bullish engulfing in an oversold condition within a few days. The price action in the euro dollar is telling me we are in the process of bottoming out around par. A hair under, 1 point under. That means the dollar is equal to the euro dollar. So when you go and buy dinner for 20 bucks, it's going to cost you 20 bucks. Love Europe, been there several times. I want to get back there again before the euro dollar goes up too much. So I think the euro dollar is in the process of bottoming out. We had a buy signal not too long ago, July 13th. It worked for a few weeks. Now we have another one approximately at the same price. Will this end up being a double bottom around the cycle low and maybe a hair late? Remains to be seen. Stay tuned. Next chart. The October lows are coming up. I can't stress this more. I have watched this for way over a decade, probably a couple of decades. And this is a highly reliable historical tendency, or you could call it a seasonal tendency because it happens in October almost every damn year. These green bars are showing you the month of October each year, and I've got an arrow. Of course, that hasn't happened yet this year. So we'll see what happens in the next 2 months. Last year, there it is. The year before, approximately on time, actually 2 different lows, maybe a tiny bit early and around the end of October. That low on this weekly chart was October 30th, a Friday. So yes, a great buying opportunity just before that huge rally. Too bad we missed the COVID crash low. Hey, I got a ER signal, weekly bullish engulfing, smack dab on the bottom of the COVID crash. That's what this strategy is built for. So I will just slide real quick now that we got some detail. Keep your eyes on the green bars on the bottom. I just erased the cycle highs. And you'll see that frequently, if you bought during that time frame, there is not only a low of significance, and if there isn't, it still went up after October. But we really like to see those lows. We like to see them get oversold, and we like to pick up the bottom of a break. Tough to do. People don't like catching a falling knife. This is what this system is built for, buying bottoms to the day and selling tops to the day. So here we have scrolled through several years. I'm going back already to 2000, and you can see how often it's extremely close to the green bar or right on the green bar, and I'm almost, that's a good one, real good one. That's it. I went back to 93. Next chart. Hogs. I'm showing you this only because it's got a pretty good track record. We had, when I started these videos a couple weeks ago, we had a great sell signal. It worked extremely well. In fact, the rally high the next day was within 2 ticks above my new short market of touched order. So I sold the rally high, period, the day after the signal, and that would be August 17th. Looks like it's going to try to make new lows here in the next day or two, maybe by the end of the week. Okay, some good buy signals, and of course, sell signals smack on top of the market. Speaking of smack on top of the market, crude oil. 3 bearish engulfings, overbought conditions for crude oil. The ER signals caught the top of the crude market. Explanation point. Bonds. The Fed. ER signals caught the bottom day on the 30-year long bond. Also a decent, not great, buy signal back there on April 20th. And we have a very good sell signal December 8th of 21, just before the beginning of this year. Also recently, August 2nd, a beauty of a sell signal smack on top of this last rally in the 30-year long bond. As this chart goes down, rates go up. It's an inverse. Okay, where are we at the moment? We are still pretty much in no place. Opened a little higher, steady, bobbled around, made a high for the day, came down, so far has made a low for the day, and come back up to 398, 399 almost exactly on the spider. Of course, it's approximately the same price movement in the DIA here in the middle, upper middle, and for the QQQ. All of these have been trading within the high and low of yesterday, so that's an inside day for the Qs, the DIA, the spider. But the Russell 2000 actually made a little bit lower low today than yesterday. Not that that's particularly important, but it's obviously showing us it's a little bit weaker. Thank you very much. One more thing here. Don't want to do this. Aha! NinjaTrader, in the near future, I'm going to start using their charts, and hopefully we'll be able to code, I expect we'll be able to code, the ER reversal in NinjaTrader. You were looking at TradeStation charts a moment ago. Now, yeah, I've been a TradeStation fan, and much more than that, for almost, well, I guess it's been 30 years. So I love it. But NinjaTrader has some significant features that I also like, so I'm going to probably make use of both as time passes. NinjaTrader, I'll go into the specifics in later recordings. One more thing. I'm a member of the Foundation for the Study of Cycles. This is a nonprofit organization. This is their website, cycles.org. Great website, by the way. Lots and lots of material here for people to learn about cycles in markets, cycles in the economy, cycles in natural phenomena, and practically everything. Dewey was the originator, the writer, author of one of the first books on cyclical analysis that became very popular, and the founder of the foundation. Now Richard Smith has taken that title. Great guy. Look into this, please. Cycles.org. You won't be disappointed. You guys have a great day. I'm looking for a bounce real soon. Take care. Bye-bye.